Hello, chart watchers and Decision Point faithful. Welcome to this Monday, February 1st, 2021 episode of Decision Point. I am here with my dad, Carl Swenlin, and we will try and get you prepared for the week ahead. It's already been an interesting trading day, and we'll be taking a look at what's going on in the major markets, as well as focus in on a sector or two. So we have lots to cover. How's everything going for you, Dad?
Still looking pretty good.
Excellent. Were you surprised by the market today?
Not really.
No.
Not really. I'll explain.
Okay, great. Perfect lead in. All right, so we're going to go ahead and look at the spine, of course, and Carl will cover the big four, which we call dollar, gold, crude oil, and bonds, the 20-year bonds. We're also going to focus in on metals, gold and silver in particular. I want to talk about gold miners right now because they're looking really interesting. And natural gas, UNG, that chart's starting to really shape up nicely. So I definitely want to share that with you. And of course, I will finish with the diamond of the week for Decision Point show. All right, so let's go ahead and get started. I'm going to share with you some of the signals that we have currently. Right now, you can see last week we lost 3 of our PMO buy signals on the S&P 500, 100, and NASDAQ 100. The Dow has been on that sell signal. It never was able to recover enough to get a buy signal, and all of these pretty much whipsawed back into sell signals. So it's looking pretty interesting on the chart, seeing those sell signals popping up again last week. And then we have our sector scoreboard, which currently is all on buy signals. We did get a neutral signal, I think it was last week or the week before, on consumer staples. It's a neutral. That means our 20-day EMA crossed below the 50-day EMA, while the 50-day EMA was above its 200-day EMA. So that's the buy signal. So rather than go into a straight sell signal when we get that negative 20-50 crossover, if we're seeing the 50-day EMA and a buy signal in the long term with the 50 above the 200, then we call it a neutral signal, which is meaning a position that's in cash or fully hedged against staples. So that's kind of where we're standing right now with the sectors. Let's go ahead and get right into the charts. I know everybody's wondering what you have to say, Dad, so let's get to it.
And starting out, I read the Husband Fund commentary regularly, and I thought the one he released on the weekend was absolutely a must read. It's husbandfunds.com, and on the menu, look for the market comment section. There's something screwed up with this. There it goes. And this is the article here. I'm not going to get into it, but basically it clearly illustrates how grossly overvalued the market is, and it's just something people need to be aware of and be careful of.
Absolutely. We talk a lot about parabolas, so it's very interesting to see his take.
Right. I mean, it's absolutely a must read. And his commentary sometimes gets a little dense. He's an economist, and it goes into, the math of economics, and it's just pile through that. There's stuff that's absolutely easy to read and worthwhile.
Excellent.
One of the things that we've been looking at, I'm having trouble with this little menu in front of me. Okay, we had GameStop. We've been watching that for a few days, and I'm not sure if this is the end of it, but the headline as I woke up this morning was that GameStoppers, I guess you call them short stoppers, have moved to precious metals. Well, I looked at gold, and it didn't do that much today. It was up about 1.5%. And then look at silver, and there's where the action is. So apparently they're jumping on the short sellers for silver, and see how that goes. This is not too gross a move for silver. It's only 7%, and it tends to move in rather wild perturbations. If you look at here's a correlation between gold and silver. You see it's dropping down. It usually stays around 1, exactly correlated. And if we go to a longer range, let's say 10 years, you can see how it tends to stay equally correlated, but drops down to where it's no longer correlated. There's not really any reverse correlation. Sometimes they don't track exactly.
Yes, certainly. Yeah, they decouple now and then. But typically they tend to travel similarly, but you can see on those dips for sure that those are the times where it doesn't really matter what gold does.
Right, and notice the volume today on this ETF, really high even higher than back here, I believe.
Does that give you pause, or are you looking at that as a possible reverse island maybe, or is it just the beginning with a breakaway gap?
Silver could be going on a run if the what do you call them, I can't think of
the short stoppers.
The short stoppers, they're jumping on this. Well, it's gonna be God knows what, but I think we're looking at something that's going to be a lot harder to move than, say, GameStop was.
Mm-hmm.
I mean, down to the business I was supposed to be doing. Today we did have a 1.5% rally. It's still, you've got a short-term declining tops trend line here, and it really just stopped onto that. Really, volume today was not wasn't real bad, but it was not impressive considering the reversal we're supposed to be getting into here. We've done gold. Let me look at the dollar. Gold was up and the dollar was also up. So that's uncorrelated for the day. It was only up 0.5%. Crude oil, USO, a breakout above little resistance line going through there, which I didn't draw, but not. Maybe this is an opportunity. I'm not sure. It's right when it's down here is way undervalued, way oversold, and up here I'm afraid it's overbought. Treasuries, they're still breaking down and not looking particularly attractive.
Yeah, they failed there at overhead resistance. That was the clue that things weren't going to go the way we wanted it to.
Bitcoin, we've got a falling wedge, and also we could call it a pennant formation. Tried to break out last week, but it failed. It closed below that line, and still struggling with that. Don't know if this is the end of it for Bitcoin. Probably not. GameStop might be the end of it for GameStop. Didn't get any increase in new highs today. That's not particularly good. We're pretty close to all-time highs. So day like today, we should be looking at some new all-time highs or some new 52-week highs. Still waiting for today's update, but this, you notice that before the price decline, it started dropping off, stocks above the 20. This is to me, this is a really well-connected, easy to understand indicator. There's no formula. It's just stocks above their 20 EMA, this percent of stocks above that. And that's, you can see us losing this grip here. And of course, last week it fell off pretty well.
Yeah, very constructive. I mean, that's what we want to see when we get these declines, is to get these indicators out of that overbought territory. And it appears that that's what we got.
Right. And it could still get a lot more oversold.
Yeah, absolutely.
So, well, we didn't get any volume ratios today, does it look like?
Yeah, we checked those to see if we're really getting a confirmation on some climactic behavior.
Right. 9-to-1 is the limit that we use on those. 9-to-1 ratio. How about our climax indicators today? Let's see. Well, definitely got climactic net advanced declines. That's pretty much it.
Yeah.
So,
looks
very
like the
weak
VIX.
Climax.
As the VIX, I'm trying to see if it doesn't look like, it looks like we may have a little bit of puncture still left on the tail today.
On the which?
On the tail of today's intraday. I think we did puncture that lower band once again.
Oh, here. Yeah. On the VIX.
Yes.
Yeah. Some contraction on the short-term indicators here. Still waiting for these to update.
Yeah, I'll be writing about all of these today on our DecisionPoint alert, and they'll of course be updated when I publish this evening. Recommend you check us out at decisionpoint.com, and you can get these charts read to you every single evening.
Right. On the intermediate term indicators, this, we've had some pretty profound negative divergences here. This top and this top versus this top. And, I don't think we're done yet. On the downside, I think we're still got somewhere to go. And I think that'll do it for me.
Okay. Well, let's go ahead. I'll get over here. I want to talk to gold miners. This is another chart that we follow every day in the DecisionPoint alert. And gold miners are finally starting to look a little interesting, I have to say. It's really not been interesting for a while here, as price has been moving down in this bullish falling wedge in the short term. We haven't really, overcome, if I were to draw in this overhead resistance line, well, I'm sorry, this rising, declining tops trend line. We still haven't really gotten close to that particular declining trend in the intermediate term. We're not really testing that yet. But in the short term, I really like the movement that we got today. We tried to break out on Friday, but you can see closed back inside that wedge. Today, we actually traded just about completely above it. And we got a close above the 20-day EMA, which I think is encouraging. But we've seen a lot of fake outs on GDX. So I know I'm always a little cautious on getting too bullish on this. But I have to say, we now have an RSI that's hit positive territory. We haven't seen that since we were moving up into this top earlier in the year. And you can see some improvement underneath the surface here. I mean, the BPI had a positive crossover, but I like the way we're kind of scooping up here on price above the 20 and price above the 50-day EMAs, trying to show a little bit of improvement, possibly bottoming here. The issue, though, is in the long term, there's not a whole lot of support for this, as we're still seeing a declining trend as far as price above the 200-day EMAs. And we really haven't seen the Golden Cross Index turn up just yet. So this is probably more of a short-term move rather than looking forward into the long term, just because we're still not seeing improvement just yet in the longer term time frame for the gold miners. So Hmm?
reverse divergence on the OBV.
Yes.
So lower bottom versus the uh, uh, higher bottom on the price.
Okay, right here, yes. And you
And
read,
as far as the Golden Cross Index, that when something's been beaten down as far as that can take a little while to turn. So I wouldn't take this as any necessarily a short-term move. I think it.
mhm. We'll have to see how these indicators, as they're starting to scoop up, if we'll get a nice move out of the miners. Gold itself, I mean, it's been interesting. And today, like you noted, the dollar was up, but so was gold, and that usually tells you that there's some interest by traders in getting into gold. So that could certainly put the wind at the back of these gold miners, depending on how the market reacts, which it looks like in the short term are going to be okay. We probably will see this continue, at least in the short term, as far as the breakout goes. But again, seeing some of the numbers here, while they could support it, they're oversold numbers. I still would like to see some improvement there before I get too excited in the longer term on the miners for now. All right, I'm going to switch us over to the sectors. So I'm looking at the sector candle glance on stockcharts.com, and you can do the sector candle glance in your own style. If you like, this is my style. I like to have a 6-month chart with the PMO underneath so that it gives me a really quick view. As far as DecisionPoint trend models, you've got the 20, 50, and 200 on here. But it matches our analysis style because I follow the momentum, obviously, in each of the sectors. But then we want to see what price is doing in terms of the EMAs as well. So if we just look straight out the gate and we look at which sectors momentum-wise are looking good, the only one really is XLRE, which is still got a rising PMO. It did try and tip over just a little bit. We'll look at that chart a little more closely shortly. But all the others we're really seeing mostly declining PMOs. I would say utilities, I did mention in my DP Diamonds on Friday in the Diamond Mine and in my recap that this was a sector to watch this week. And so far, it's just not really shown us that much. I'm going to go to our actual sector lists and charts here. So utilities. All of our subscribers have access to all of our sector charts that look exactly like this with all of the indicators underneath. You'll recognize this. It looks very much like the GDX chart that I showed you, only this is sector-wise. So utilities, I was starting to see a little bit of a shift here, possibly to the upside going into this week on utilities. But, it's just, we still don't have the wake-up call going through to utilities. You can see the silver cross is still on the decline, which is, going to measure intermediate term, what we're looking at. And BPI is rising. You can see a little bit of it's trying to bottom. But looking at the rest of the indicators, they're oversold enough that we could see them turn and get the utility sector going. But overall, we're really not seeing much participation. There's not a whole lot of excitement going on under the surface right now. But I'm going to be keeping an eye on this sector because if we do see a market downturn, my expectation would be to see more interest in this particular area of the market. Right now, it's a little sleepy. Real estate, though, like I said, when we looked at that sector candle glance, this is certainly where we're seeing some interest as far as momentum goes. We've been on that buy signal as we were getting the move here. It got stuck on overhead resistance and pulled back, which is what you want to see. You should see that pull back. And now we're starting to make an attempt to get back above that overhead resistance. So this in the thumbnail gives me the feel of a flag kind of formation. We had a nice strong rally, kind of consolidated it up. And now it looks like we may be ready to go on another leg to the upside in real estate, which is very interesting. So the only issue though is when I start to look, dig deeper down and look at some of these indicators, I don't like seeing the price, seeing participation starting to lag, meaning the stocks within the real estate sector, those stocks, we're starting to see the price lose the 20-day EMA as support and lose the 50-day EMA, in fact, as support. So we're seeing these tip over. So it might be a little difficult to get that breakout in XLRE, but I certainly think there are some interesting stocks within that sector. And one of them I will be giving you as before we, yep.
Before you go.
Yes, I'm not going into it.
Yeah, I want to point out that the price since about May has been in a fairly narrow range, and you can see where the 20 and the 50 have had numerous crossovers back and forth. So it's really narrowed out. Everything's close together. All three of the moving averages, even the 200, are very close together there. And if you look at you saw that the stocks above their 20 EMA was dropping off, and 50 stocks above the 50 dropping off, and that's just a function. That's going to react a lot faster when you've got that narrow price range, and you can see how often it's dropped below the 20 in that period, at that 10-month period, chart above and below the 20. So the stocks within that sector are doing the same thing.
Mm-hmm. Time for them to break out.
Right.
We'll have to see how that goes. But I think really when we looked at that sector candle glance, this really seems to be the only place with some internal strength going on and positive momentum. Everything else is looking kind of soft. So I'll be keeping an eye on it, obviously, for my diamond subscribers. But right now, I mean, I think this is probably one of the few areas that we're seeing, like I said, that positive momentum. And, you know, you want to go to those sectors where you're seeing that kind of activity because your confidence level can be a bit higher when you start looking at some of the stocks in that area. If you're seeing overall that particular sector or industry group rising. So I think this is going to be pretty interesting going into the week, and certainly a really nice rally today for sure. Would like to see that breakout though. That will really tell me that things are on the right track. And that this was just really a function of that decline, and that we'll see a bit of a turnaround here. So I think that's a pretty interesting sector. But I'm going to, before I go into my diamond of the week, I wanted to look at UNG. I don't know if you have a chart you would want to throw at us, but it's starting to look a lot more interesting. I actually, with diamond subscribers, I was looking at this as the breakout of this double bottom and a good buy point. Well, of course, we got fooled and we ended up with the decline. But now what I see is a reverse head and shoulders, and we're getting an execution with this big breakout move today. So I like UNG. This isn't my diamond of the week. I'm just pointing out that I think this is a really interesting chart right now. What are your thoughts on UNG? I know you follow it closely as well.
Yeah, that was really a tedious a triple bottom there in December on, and last Friday when it dropped there, I thought, oh no, not again.
Right.
But I like this as a trading vehicle because it does tend to make some nice moves. And at this point, it's looking good, but
yeah, hopefully no reverse islands. We don't want to see anything like we did back here.
I would have probably wanted to enter sometime around the end of December.
Mm-hmm.
I was looking at it, but I just couldn't get excited with it.
Yeah, but I mentioned it to you back here, and you were like, nah, I'm not convinced.
Yeah. And you notice today it's closed, in the lower half of the bar.
Of the right.
of the bond again.
I'm gonna just
The
put up
day
the
we bought.
5-minute. Kind of curious how the actual trading went. So we had the big gap to start the day, and then we kind of just petered around here, sideways move, consolidating it. But you can see, yeah, the momentum started to really shift lower on it. So negative RSI as price continued to move slowly across. So interesting as far as just in the short term. Curious how that was trading. All right, so let's go ahead and get to the diamond of the week. As I said, it's going to be coming from the real estate sector, which I will show you right over here again, just as a repeat, but there you go. So it's coming out of this sector. I'm looking for breakouts, and public storage was one that I put forth to my diamond subscribers last week on Wednesday. I believe, yes, Wednesday of last week is when I started pointing out some of these real estate sector stocks that I thought looked interesting. And really the specialty REITs and retail REITs in particular really started to perk up, look good. I mean, this one's already been, inching its way higher. Each time it gets higher, it, consolidates the move. And now we're getting another burst upward. And this actually is a breakout of a falling wedge, which is a bullish pattern again. So I think that this is a pretty nice setup right now. And it's really not too far off where I had mentioned it to diamond subscribers, which would be at the top of this little pink line. I like this one in particular because you wouldn't need to set a really deep stop here. And honestly, I put in these stop levels. They're kind of an intermediate term level stop usually. Mainly I just show you so that you have an idea of if you're going to set a stop, just what the levels are. And this is the important one, is this support level. But honestly, if it loses that 200-day EMA, or if it starts to really fall back within this wedge and look like it wants to come down and test the bottom of it, I don't think you'd have to wait. So that's the one thing with these when I do point them out. But you can see we had just gotten a positive RSI on it. We had the buy signal that had just about, I think at the time, yeah, it had come in already. You have on balance volume pretty much confirming this rally out of the low from earlier this month. And, the scooter, the StockCharts technical rank is telling us that we do have internal strength as well as relative strength. All right, well, we'll talk to you next week. This has been the Decision Point Show with Carl and Erin. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.